Hey everybody, Rob Booker here, and let's talk about the British pound. So I have this crazy idea that's going on right now about buying the British pound, and I want to talk to you about that. And as you can see, it's in a pretty significant downtrend. And of course, trend traders do make a bunch of money. There's no reason to argue with that. But occasionally something happens that is extraordinarily rare and it's worth taking a look at. And I want to teach you a little principle here, and I want to show you where we might get a pretty fantastic opportunity to enter a British pound trade. Now, I want to give you the caveat, and I want to give you one item of warning. I did go long the British pound right here at 48.85 or whatever. So I am long the British pound right now, and I'm going to talk about that position after I describe the phenomenon or the event that happened here. But we'll come back to my trade that I'm in and that is currently down about 115, 120 pips. All right, let's start with the principle of looking for a turnaround in the market. It's very difficult to do. Trend trading is typically the way that you want to handle things, but occasionally something happens that shows you that the market is ready for or thinking about a turnaround. You'll notice here at the bottom of my screen divergence lines. This is the Knoxville divergence indicator. You can get this indicator on tradingview.com charts. Tradingview.com are free web-based charts that go wherever you go. I love them very much. And the Knoxville divergence indicator was created by me and is available at a subscription inside of the tradingview.com charts. The indicator is also available for free for MetaTrader if you look below this video on this page. All right. This is divergence. This is an early warning sign that the market has begun to trend so far and so fast that it has reached a point where it typically can't get to. Now, the 4-hour chart was divergent right here around the 12th and the 11th of March. Let's move to the 1-hour chart. You'll see that around the same time, it was divergent on the 1-hour chart. You'll see that on the 15-minute chart, around the same time, inside of the same structure, inside of the same time frame, it was divergent with a very small divergence line on the 15-minute chart. Now, here's the kicker. On the 12th, it was also divergent on the 5-minute chart at the same time. That is quad divergence. That is very rare. When divergence shows up on 4 time frames simultaneously. That's not a perfect setup, but at those times, you can drop down to the 5 or 15-minute chart, and there is essentially on those 2 lower time frames, there is essentially a very high probability trade that goes against the trend for a small amount. Right here, an entry at the bottom, 48.53, and then a move up here, and it was, I mean, that's a pretty significant, that's a 45 pip move, and you could take that out of the market. Now, it's rare. It's going to happen like once a month on a currency pair, but when it does happen, it's extraordinarily awesome. It's really great, and you can start looking for it whenever divergence appears on a longer time frame chart. That's when you can start looking for it. Now, I sent out an email about this yesterday. Yesterday, I talked about this in a video that I sent out by email, and I did a Twitter post about it or whatever, and I did a YouTube video about it, and I got long right here. And because I don't want to be the one who gets out and says, "Ha ha, everyone, I took your profit or whatever, and you didn't get out," I stayed in this trade because I'm not going to send something out and talk about quadruple divergence and then be the first person out and then laugh at the people who didn't get out of the trade. That's not the kind of person that I'm going to be. What I did was I stayed in this trade so that in part 2 of this video right now, we could talk about what to do when you get stuck in a trade where you have traded against the trend and maybe your final profit target didn't get hit. Maybe you forgot to put your stop loss in. Okay, we all make mistakes, right? So I'm doing this live actually. And so I'm actually down about $4,500 on this trade right now. And I want to talk to you about what happens and where you go from here if something like this goes wrong. This is a principle that I teach inside of the trading courses that I do. The first one is, principle number one is you take a small trade size. We can look at this account in just a minute. I'll pause the video and bring this up in just a minute. But on a 400K account, I might take at the most 4 standard lots. So 4 standard lots. So that right now, if it goes 100 and something points against me, I might be down just 1%. Now that's a large trade size. Even that's a large trade size. On a $10,000 trading account, you might take a trade like this with maybe 5 micro lots. Something small. Trade size is everything. Trade size means everything. It's such a big deal. All right, first of all, your trade size is small. Number two, if you get stuck in a bad trade, your best option is to just wash it, meaning wipe your hands of it, move on, and do something else with your time. But don't try to weasel your way out of it unless you have practiced this strategy and you feel absolutely comfortable doing something. So number two, one of the best ideas, just wash it out. Just close it out. If it's bad, if it's down 1% of your account, just let it go. Just walk away from it and get in later and don't worry about it. Number three, if you are an experienced trader and you feel like this is a situation where you've taken a small position, you don't need to close it out because it's small and you're doing fine. You're not concerned about it. Number three is you do not enter another trade until the trade has gone against you 250 to 300 pips against you. And you only are going to add one time. You only add one time. Now, this is, once again, something that I do on an occasional basis and rarely. I don't get into this very often, but when I do it, it's called rolling over a trade. And it's when I find myself in a little bit of danger or a little bit of trouble, I'm down 1%, and I think that I've picked a good spot to get into the market, and I'm going to go ahead and give it one more try, and I'm not going to let go just yet. When I do this, I will look for divergence on the 4-hour, or I will look for divergence again on the 1-hour. And when I find that divergence on the 4-hour or the 1-hour, and we have gone 250 plus pips against me, again, the trade is negative by that much, then I will take another position on the next creation of the divergence, and I will take it with a position size that is the same size or 2 or 3 times larger than the first position size. If this second trade goes against me, I stop out of that trade. I'm not going to hang on to that trade. And I will just wash my hands of the whole business, walk away from the trade, and I will lose 1 or 2%, maybe at most 3%, and that's it. I just walk away from the trade. And if you lose 1 or 2% or 3%, it's not the end of the world. You haven't made some giant mistake that you can't come back from. So there's a few options that you have when a trade goes against you, and I'll be walking you through some of these options personally. When I do the next video over the weekend, we'll talk more. We'll take a look at the account and whatever else, since the video's already gone on for a bit. But right now, I'm currently down about 1%. I took a reasonably small trade to begin with. I'm not going to close this out. I'm going to let you watch how I work through this position, and I'm going to wait for this to go against me. Now, by waiting for it to go against me, if this wants to turn around right now, it's perfectly fine. And what I'm going to do is just take a really small profit if it comes back in my favor and can come back up toward next week's new weekly pivot, which is going to be somewhere around 49 or 49.50, depending on where we end the market today, where the market closes today. So that's an update from me about trading the British pound. And I hope you had a good time. I hope you enjoyed it. I'll go back through it really quickly. First of all, trading with the trend is generally what you want to do. Occasionally, something happens that gives us a really high probability entry on a short-term trade with divergence against the trend. Now, as a matter of example, I wanted to show you what happens if maybe your profit target was right here and you didn't get out with profit and you forgot to set a stop. And, you know, it's wonderful to say that nothing bad should ever happen to your account, but what if something goes wrong? How do you deal with it? And once again, small trade sizes, close it out if something goes wrong and just make up for the loss with trades that you have later on. And number three, wait a long time to add one additional position only and give it a chance to come back. I'm Rob Booker. Thanks for watching the video. I'll be back over the weekend with an update about where the day ended today on Friday and what I'm going to do about it next. Talk to you soon. Bye.